Steve, welcome back.
Hey, good to be here. Good to
It's
be
great.
here.
It's great to have you. I'm going to stop sharing. I'm a fan, Steve.
Well,
You
I
know,
know
so
that. I appreciate that.
but I have to say that I've been, kind of letting go a little bit and stuff, and I haven't seen any of your videos for a while. So I was really looking forward, um, to oh, legendary expertise. Okay, and there you are doing your commodity perspective. So
Yeah, you see the top right
beautiful.
picture? That's 1974 on the original CBOE floor. My back of
Yeah,
that's my hands up right over there. So,
I tell you what, we were so lucky to live
yeah,
that. Yeah.
man, you believe we've been around here 50 years? It's just crazy.
When the calendar turned, in one respect, it felt like Groundhog Day,
Yeah,
right?
yeah,
We've been staring at these candles for a long time, Steve.
yep,
We
that's
should
true.
we should know how to jump over a lit candle without getting our tushy burned by now.
Yeah. Well,
What do
it's
you think?
I don't know. I think my butt is numb right now getting burned, you know.
Yeah.
Right.
So a lot of things have happened since you and I talked, the red wave and
Yeah.
new,
Yep. A lot has
market.
changed.
We had a little bear raid in December.
Hmm.
Um,
Tax
and
selling.
tech, no, before that though.
Hmm. Oh yeah,
When
right.
we were down that 180 handle day.
Right. Which
Um,
what markets are you interested in seeing today?
I know that you've been looking for a high in the dollar for a while. I'm wondering if you think we're there.
Well, let's take a look at that. We'll switch over. I happen to have the dollar up right there because I kind of thought you would might go to that one first. So,
Okay.
first of all, I must say that last time we met, we were talking about the dollar potentially making a move down to about 100 and getting below it, was sometime back in September. And, I had a feeling it might get down over there, but then I thought it would get into a rising phase. Now, I got to tell you that I didn't think it was going to get over 103 or 104 at that point. But then,
Yeah.
of course, when, we get into the period where Donald Trump gets elected, then it's, the whole story changed in a lot of markets because when
Right.
you're looking at the potential for his policies and the potential that that would push up interest rates in a significant way while you have the rest of the world really struggling. I mean, China nearly in a recession, or if it's not in one already, Europe
Yeah.
really slow. You've got a serious disparity in interest rates going on, and that drives
There
a lot of
and the
money into the
sentiment,
dollar.
there's absolutely no reason fundamentally to want to buy Europe over the US, right? I mean, the news is there's no
No,
reason,
no.
and that's a reason I'm looking for a low because there's no reason.
Well, I know, but I can't on anything I look at time a low any sooner than maybe in the
March.
mid-year some point. I mean,
Okay.
you see this note right over here, Euro trough, March to April.
Yeah.
That's about the time that I expect the dollar to be peaking. So if you look at, I'm going to blow this up so you get an idea. People that are watching this may not be used to seeing cycle analysis, but there is a very, very good rhythm in the dollar market in here, as you can see. On the bottom are the
Yeah.
cycle brackets, and that shows you the rhythm of money flowing in or money flowing out.
Yeah.
And as you made the bottom in here and it began to move up and it moved through all the resistances, well, that took you up to these real important extension levels and into this
Yeah.
resistance level. But now, if there's a pullback, that pullback probably only comes here into around February and then up again into this March, April period. So this support in here is around 107 and a quarter. I don't
Yeah.
see it
That's
getting much below about 107 right now, pulling back and then moving up
okay.
again. So if I look at the euro, I'll just look at the inverse of this, of course, EUR US dollar. You can see in here, once you got the breakdown under this level, the timing for the troughs in the euro are over here, which is in March, and this is in April down over here. And there's a potential getting under one. in the euro right over here. So we'll just look at this in here as it broke down. You have all of this time to decline here in the euro, which means you have all of that time to rally in the dollar. So right now, we're looking for a potential just pullback in the dollar and then moving up again. Well,
until
here's a
March.
potential rally in the dollar and then moving in the euro and then moving down again. So, I don't particularly like the idea that I have to be bullish in the dollar at these levels, but I'm a technical analyst and this is money flows, and what we see is essentially money moving into the dollar. And when I look at interest rates, I mean, this is really the key. I'm going to look at the 10-year rates right
We going
here.
to five, above five.
I mean, this pattern in here suggests that there's going to be a pullback in rates, but then move up again. Look at how well this aligns with what we just looked
Yeah,
at in the dollar, right?
right.
Which makes
Yeah,
a ton of sense. So some
it
pullback
does.
in here, maybe down to 4.5, 4.4, something
Yeah,
in the and then moving up again. Now you see this note right over here, the 10-year trough, which is inverse, comes out to
yeah,
March or April. That's exactly what we just looked out at in the euro currency moving down. So
right.
there's all of these beautiful correlations and alignments, and they say to me that interest rates are still going to stay strong out into that March, April period.
Is
There
it
would
near the equinox, Steve? Because I pay
and I don't
attention to
really
those.
follow, I don't pay any attention to that
All right,
really, but
all
this
right.
is the
Well,
10-year, which is really an important key to what you're looking at. You can see this cycle analysis right in here. It's called for this rally, which failed in resistance very
yeah,
early in this pattern. And now you
yeah.
have all this time to decline out here into late February. The daily
Wow.
patterns are synced also. So, I'm looking for higher rates, lower treasuries out into that March, April period, and at the same time, a stronger dollar, even though
Dollar.
there's likely to be a pullback in there.
Okay. Now I'm curious with what your forecast is on yields because I look at TLT, Steve, and um, I think we're to take out that 80 low and actually could have I my next support level 72 after it takes out if it takes out 80 in TLT.
So here's that same ridiculously negative pattern
Yeah,
that we just saw in the ZNs. You can
yeah,
see in here that it came down to this major 78.6% support. But
yeah.
really, when you look at this and all the time that's left, I would project this down to that 82 level right
Okay.
over here as a
Yeah,
potential right in here. But this is a
yeah. And
very
take it out.
negative pattern when you look at this. Interest rates have a very high, remember, everything is probabilistic, and they have a very high probability of continuing to stay strong and move higher into this end of Q1 period for this year.
Okay. How about
After
the
that, it
indexes?
gets better.
Yeah, okay.
You know,
So I'm wondering, it's almost like the new administration is going to come into sovereign debt crisis because we could get some type of we've come down, and everyone thinks, well, it can't get much worse, and then you have a huge down day after it's already been eroding. To surprise, I've been in trades like that the wrong way, where it's grinding down, and you think it's going to turn. It's so oversold. You might even have divergences, and then you have one down day. It continues to the downside. Do
yeah.
you think?
If I step out of the technician's mind for a moment, when you look at Trump policies, I really believe that, first of all, Trump tariffs are coming, no matter what that Washington Post news was. You
Right, he
know, the,
denied that.
yeah, they're coming, and I believe that tariffs initially are inflationary, but then based on the extent of their response, they could be very deflationary, and that would be well in alignment with what I believe is going to be lower rates starting in Q2. So the peak
Okay,
in rates in Q1, lower rates in Q2, and the peak of the dollar at the same time,
okay,
when that begins to reverse. So um, I know you're bullish in gold, and I'm very bullish in gold long term, but I don't think the gold market's going anywhere. The metals
until
markets are going
March.
anywhere until after Q2 or into
Okay.
Q2. You
I
asked
appreciate
about
that.
you asked about the stock market, which we have our own proprietary momentum indicator, and you can see this on the weekly SPX where this has turned down right in here. So that's giving me a sense that we're in a peaking pattern in here.
Yeah.
I heard your earlier discussion based on the Mag 7, and of course, got up near about 38% on concentration, where the 10 top stocks are about
Yeah.
38% of the S&P 500. That, by the way, is historic.
Okay.
You're looking at book values, historic PEs, any way you want to measure it, the valuations are historic. So if the market's going to hold up, it's only going to hold up based on a rotation. That would mean that you have to get low caps, mid caps value all moving to the upside while these Mag 7s, while the money comes out of them. If not, the market's not going to, stock market will not have an easy time. My projection for the year on my big picture analysis was maybe sometime later in the year getting to 61.75. But to me, that's probably the highest we'll see it this year. Is my guess. Right now, we're in this kind of choppy corrective period, which comes out into February. So that says to me that the likelihood of attempted
Sell up.
rallies to the upside will not, they will not allow the market to go up very far. So,
Okay.
I would say, hold on one second here. My wife set off the alarm in the house, didn't turn it off. I just got it.
All
Um,
right.
so I think I got it before the police come here. So when I look at the daily chart over here, you can see in here our projections really are for this. We're in this sideways chop on the daily chart, but then
Yeah.
sometime over here, pulling back and coming down into late in the year. Uh, and I need to have you hold one more second. I'm sorry to do that
Sure.
to you.
That's
If we could
okay,
just
Steve.
talk for a moment.
Life happens.
Okay, I think I've got it. Sorry about it.
Okay, that's
So,
fine.
when I look at the Nasdaq is exactly the same patterns that we're looking at in here,
Yeah.
where it actually did break a key level and then tried to come up. So it's really hard for me to see the Nasdaq getting any kind of enough upside flows into there to get much to new highs. Again, this is looking for a corrective period here out into February. And the Russell actually is a little bit better. It hasn't quite had the breakdowns that on the daily chart. Here's your weekly chart again coming out into that February or March period.
Yeah.
But on the daily chart over here, this is actually it held up above that low and moving up, so it's a little bit better, but not much. So
Yeah. It
there's
looks like a
nothing.
bear flag.
Yeah, if anything, it does look like a bear flag. So to me, all we're in is this choppy area. All the momentum conditions in here are not good. On the bottom, you can see it's our proprietary slim ribbon PO, which is red and getting ready to roll over. When you get a down arrow, that'll be negative. See momentum here on the weekly is negative. So while the short term may be a little bit better on the Russell, it's really not in the best of shape in here. So the indexes don't look particularly good when you look at that. There's, I think, one really important chart that I'll put up that I think, let me just get this dialed up in here. And that is the VIX on a monthly chart. This is a chart that our members get to see, but I'm just going to blow this up so that you can get it. Look at the incredible cyclical action that you see here in applied volatilities. I'm going back here
Yeah.
to 1987. And each of those periods where there is an important um, uh, outflows or a period where the VIX essentially remains low, that's where the stock market does really well. And then when it
Right.
turns up is where you get into the periods where
Right.
the stock market goes into sizable downside moves and big moves in implied volatility. And you can see you have the long-term capital management, the bear
Yeah.
market here, the bear market here. And we are just coming into the rising period of implied volatilities on a monthly basis. This sets up, in my opinion, what I call is the great reset, the reset that comes after massive upside moves in the stock market. You know, we had one that lasted from 1929 to 1942. You had one from, 1972 to 1982. You know, these are 10, 12,
Yeah.
14-year corrective periods. And you've got the same thing where you just had this massive rally in the stock market. And we're going to get into a long period where it's very hard to make significant gains in the stock market. Money, there's a lot of money out there, and if unless we get into a serious deflation, which I don't know that we will, because the government wants to
No
keep the
one,
money
all we
flowing.
know is that we don't know
Yeah.
what's going to be happening
You
with the
know,
new
so
administration.
I don't know where the money's going to flow, though I'm very suspicious at some point it's going to be flowing back into the commodity markets.
Yeah, me
And
too.
that's where the real bull is going to be. I'm going to switch over to gold before we run
Okay.
out of
You're
time.
looking for 2400?
Look at the diamond in here. And
Yeah.
I'm concerned about that at the same time that there's a corrective period going on and a breakdown in the silver market. I know you were looking at silver, but that has a breakdown in there. And if you look at
Uh,
this cycle right over here, this is the silver cycle, the dashed one. This is the gold cycle. This is the corrective period right here. I'm
huh.
afraid that it's going to break this diamond and then come down, and we get some throwaway into this area somewhere around, well, 25.50 down to about 20, just around
Love it.
24.95.
I'll buy more
If
miners.
that were to happen, then the next rising phase comes after that. But if you look over here, this corrective, the big corrective period, and look at the significant cycles in here, how important that dominant rhythm is that's in there, that doesn't end until mid-year. So we really
Yeah.
could be looking at a second half story in the metals before
Okay.
they really get a significant upside move. When I look at the daily chart here, and you can see the gorgeous cyclical patterns in
What
here.
if we break out of that diamond to the upside?
Well, I mean, that would be a better situation, of course, if that were to happen. And it doesn't take a lot to do that.
And then we get a correction. Say
And
we
then
make,
it pulls back not as far, it moves up
right.
again. It still moves into June before you
I
get
hear you.
the ultimate corrective period that doesn't really change anything.
Right.
And if you look at this daily chart, I mean, these corrective periods come exactly on time. We're in one right now that
Yeah.
ends in mid-January. So what happens then is you get into this upside movement right in here, which is
Yeah.
likely to give you some kind of a failure here in the 2700 area and then moving down again. But when I switch this over to silver, this is really a pretty bad warning when I look at this in the silver market.
Yeah.
And that is this all while we're in the diamond formation in gold and didn't have any kind of a breakdown, silver did. So this points silver down to 28, down to about 26, out into
That's a
this
breakout.
period in March.
Yeah.
It
Okay.
already, in my opinion, had the breakdown. Momentum turned negative over here in November
Hmm.
and has continued on the downside. Momentum in here on the daily chart turned negative twice right over here, and here we're in a negative shape. And look at this scary head and shoulders that's formed here and actually is completed. I mean, that points down to $24 when you look at that. So
Yeah.
silver looks so bad to me that it really has me concerned about the whole
Doesn't the gold,
complex.
how about the gold silver ratio? Doesn't give you a different message?
Well, it gives me a message that the gold silver ratio will continue to widen out,
To go up
potentially
again.
to go
Head up.
up
All
until
right.
this period in May, June, when these bottoms are due. And then after that, you could get into, we know that silver's got the stronger beta.
Right.
And we can potentially see a very significant change where this gold silver ratio drops significantly in the second half of the year. That's
Okay.
really the way it lines up to me.
So you're probably there in the minors too. How low can they go? Because you did
Well,
pretty well with SLV last year.
oh, I had
And
some really big
yeah,
trades in there, and I actually got out at the right near the highs. I mean, I sold the
yeah.
SILJ at
Oh, juniors.
around $13.
Yeah, yeah.
This is the
It's
SILJ right over here. So
yeah, it
it's
looks pretty ugly.
I did phenomenally well in there, but look at these horrible patterns that are in here. So this pattern right over here bottoms. I didn't pull this down, but bottoms sometime in February, right there. This one over here bottoms also late February or March. So if I were to buy these, and I'm planning on buying them again, it would be for a trade probably under $10 in the SILJ, but only for a trade because we're looking at that period of it correcting out into June. This points to a correction out into August. So I'm not thrilled with buying these except for a trade. And then again, they could have a much better time of it sometime in the second half of the year.
Okay, so the same with the minors that they
Yeah,
between.
GDX is making a low right over here, but then this one points way out into August also. But here you got a trade that's setting up here in the GDX.
Yeah,
So, you can see the low that actually came here in GDX already. The
yeah,
gold has got a little bit more time it could pull. So if you wanted to enter for a trade, I'm all right with that if you're a short-term trader because you could, have this kind of a move here
yeah.
before it turns down. But it's only for a trade, 34.50 to 37. That's really all I see, potentially 38
Okay.
over here. But once I have the anchor points, I'll be putting in the resistances. But I don't really have an anchor point yet. So.
All right, so it sounds like there's a lot of chop the first quarter.
Yeah, I think
What?
so. And it may be that way the first half of the year. And I think for all of the markets, that really may be the case. And I think people are going to be disappointed by the fact that interest rates are probably going to stay high for a while and the dollar is going to stay strong and other currencies are going to stay weak. I mean, when you look at the British pound, that looks terrible.
Yeah.
Um, one market we didn't cover is oil, by the way. And
Oh,
I had talked about oil moving down into this exact time frame and then making the major bottom. Here's this where all of the cycles make its low right over here, and we were looking for a low around the end of the year and turning up. Oil is one of the markets that I really like. I mean,
okay.
I think
That's a
it's all
sleeper. People
already
are
made
bearish.
already made that very important bottom. My projection for the year is reasonably up to $84 sometime this year. It could stop in here on these resistances at 77 or so, pull back, and then make another move up in the second or third quarter. But
Okay.
oil did exactly. I mean, look at these harmonics in here. They are crazy gorgeous. And
Yeah.
this is just the perfect time for this to be turning to the upside as you see this completed harmonic family in here and the upward turn. Those other lines in here are that you see are the cycles in gasoline and heating oil, which turn up exactly the same time. So the products are just very much in line
How,
with it.
how about nat gas in line with the
Uh,
WTI
natural
and lead?
gas, natural gas, I think is just in a super great pattern.
Yeah.
Um, Whoops, that's NQ.
Yeah, I like nat gas.
And again, if you look at I'm on the weekly chart, look at these cyclical rhythms in here. I
Yeah.
mean, they are just gorgeous. Now, you see this corrective period that we're in?
Yeah.
This lasts out into sometime in February, let's say. And the daily chart actually has its bottom synced in February. So this corrective period and then moving
Got
up
to buy it.
again, easily getting up into this, mid fours, maybe even into the fives, depending on where these extensions go when I have the anchor points.
Yeah.
So, fool around here for a month or so, month and a half, and then moving up again. And these are just absolutely exquisite when you look at that. So
Steve
really,
Miller, you
really
did it
liking
again.
that.
Like every time, never fail to open my eyes to some things that I wasn't thinking about till you and I had a conversation. And I know people that watch you are, you know, love your stuff, and they should consider getting involved with you. How do they go
Yeah.
about it, Steve?
Well, the first thing, go to AskSlim.com. We have a ton of stuff in here. And you see this top right over here, free daily S&P analysis. They
Yeah,
get our S&P analysis every single day for free. This is the kind of the real entryway into how to really get a sense for what we're doing. And learning the cycle analysis that we do is a long, long process. I have a workshop in here called a cycle analysis workshop that, once they want to really invest in learning this type of analysis, this is 26 video modules. Took me 2 years to write, about 7, 8 months to produce. And so it's a real good way for them to learn what we do. Go to AskSlim.com. You have any questions, write team@AskSlim.com, and they'll be able to
yeah.
help you.
So Steve brings a wealth of experience, has a team, and his cycle work is excellent.
Yeah, thanks a
So,
lot.
you're going to need it this year. Okay,
Yeah,
this
yeah,
like I said, Steve, the days of owning the spy and going out to the golf course for 3 years is over.
done.
Done.
100%. Right,
All right,
done.
buddy.
Yeah,
All right, so you need to learn how to be tactical now, not just I can ignore it because everything's you know coming up roses.
that's true.
S-
If anything,
Steve,
the downsides are going to be scary, so they got to learn.
yeah, and congratulations on having Gabe Kaplan in this picture doing his charts.
I've had a lot of people tell me that. I had a lot of people tell me that.
Well, you
So,
teach, you
yeah.
teach trading. You're like this.
I'm a poker player, and back some years ago, he's a poker player
Yeah,
also, and we were
yeah.
both sitting at the same table.
People say you're brothers. Did you look at each other?
I've had people tell me that. Yeah.
Yeah. All
All
right,
right.
buddy. I
Okay.
hope you and all your people have a great year and that pips and profits just overtake you like a flood.
Beautiful. Thanks. Happy New Year to you.
Happy New Year, Steve.
Take care.
Steve Miller, everybody. Follow him. And that's a wrap. Remember, don't just count your pips, count your blessings. You could join the team in 15 minutes on the morning edge. Isn't Steve great? Some real excellent looks. Thanks for sharing, Steve.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.